Hello traders. The title of the video is how to improve Fibonacci sweet spot trading fast. We can say that this is the $1 million Fibonacci trading video. The reason is most investors, those who buy and hold, all right, the hedge funds, the position traders, the long-term investors are entering their trade or their position in a zone of the sweet spot Fibonacci, okay, in a zone of the 30, in a zone of 50% correction, in a zone of 50% and 61.8% Fibonacci retracement of the prior price action. So if you are somebody who want to have a portfolio, buy and hold, all right. If you are somebody who are tired to lose as a day trader, swing trader, so what you'll notice a lot of swing trader can swing trade, but they do not know how to apply a top-down trading method, or they are just a little bit unlucky quite often. They place a trade, they are taken out of the trade, and before they probably do exactly what they're expecting. So for those traders, it makes sense to have a portfolio when they buy and hold the stock. Can be 50 share, can be 10 share. How much profit are you willing to gain out of those trades? That's it. And how long do you want to hold it? So a typical scenario can be a swing trader may lose during a year, okay? All right, 5,000, 10,000 or more, all right? But if that swing trader has has used a portfolio, he may have saved some of those money because his decision probably was correct, but maybe he was a bit unlucky or he did not time the market correctly. All right. So it's very important. That's why I'm talking about $1 million trading video because it's a very important topic for somebody who want to remain in the market for some time or who are trying to get the money that they have lost in the past, get something back. So sometimes a trader may have a portfolio when they buy share, a financial instrument and hold, buy an asset and hold at the right time at the right place. So you want to understand the sweet spot trading zone. It's not just a magic one. Okay, you want to check the fundamental, okay, and hear the story before you want to combine it with what we are about to discuss. Okay. So technically speaking, I have recorded a video that I'll post before this one, okay, because I'm recording videos to them. And I say to traders, the biggest mistake that traders are making, those that are trading in the sweet spot zone, all right. Those those mistakes is very simple. So I can touch upon that very fast. Here it is, that channel. So watch that video. Title of that video is how to avoid 50% Fibonacci sweet spot biggest trading mistake like a pro. So I'm not going to do well on it this time because I discussed it for almost 30 minutes in that video. So here it is. So when you want to apply that strategy of buying and hold or improving your swing trading or position trading in the sweet spot zone, Fibonacci sweet spot zone, the zone between the 50% and the 61.8% Fibonacci retracement zone, the best place to enter the trade is here. That's it. That's the you see the arrow here. That's it. So the price went up, initial bullish momentum, a pullback. Now it's out of that channel. Okay. Now it start going up. It breaks above a resistance here and retest that resistance, and the common center line is broken. That's your entry. There was another entry here. You can enter again here, 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 and here, as long as the price form a higher low and a higher high, and the common center is broken. But somebody that want to buy and hold, usually they want to enter near the sweet spot zone. So price went up from here to here. The sweet spot zone is the red line here, the two red line that you have here, the zone between the two red line here. So that's what I put here. Sweet spot zone is highlighted by the two red line on a monthly chart or WSO point B, class B. Okay, here it is. So the pullback is out of that channel. It goes above, start displaying hello. And you want to trade on the edge of a trend line. All right, so for the first time probably you'll be drawing like this, connecting this one and this one. That's your entry zone there. All right. Or better, you can use a pitchfork tool. Yes or no? You can use a pitchfork tool. Right. So came out a bit, blah 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 blah, form a double bottom, and now it's going up. So all in all we are saying is that allow the price to come out of the pullback channel and to start displaying higher lows or forming a bullish chart pattern above that channel. See the blue line? That's it. Now, it sounds very simple, and everybody say, I understand that, but people don't do that. They rush into the trade, and sometimes they get cooked. This example is typical example when the price form a bullish chart pattern in the sweet spot zone. So more experienced traders probably will have entered the trade here after this trend line is broken. Double bottom, common center is broken, start going up. If you buy it after the common center line is broken, your first target is the neckline. So you can be very patient. The reason why it's good for somebody who want to buy and hold to buy above the channel, when it's out of this channel, it's telling us that bearish momentum is diminishing. See? So you have done your fundamental analysis, you have done your due diligence, all right? You don't just come to buy at a sweet spot zone. You have other reasons why you are looking at this stock from the viewpoint of a technical trader that is using the sweet spot zone. All right. So now this is the best place and the best time to place that trade safely. What we have noticed is that sometimes people will buy here, all right, and the price because the price is still in a declining channel, and they forget that channel, and they also forget this very important trend line, this trend line here. And what you will notice is that uh, people are just guessing it because uh, they have used the same strategy in the past. It worked for them, so they're just using it, but they don't understand it. But what I'm trying to do is that you understand what is taking place, so you can time the market correctly. But if you want to buy a hold, I need to repeat this because I said it before. I'm repeating it again. Don't just use the Fibonacci sweet spot zone alone. It's a mistake. Use it always with the fundamental and economy news. If you want to buy and hold, you want to remain in it for how many months? 3 months, 6 months, a year? That's up to you. Right? That's it. This is it. This is your best entry point. All right. So to improve, so the title of the video, how to improve a Fibonacci sweet spot trading fast. If you want to improve it, instead of just doing all kind of things here, to improve it fast, so look for your entry above the channel. That's it. That's all I want to tell you today. Look for your entry above the channel, and that will help you. So if you are wrong, you will know. So you draw a line. So if you were buying here, priority to bullish signal above, priority to buy signal below. You are buying here, same thing. See, you didn't break it at all. You retest it a few times. So first time here, second time here, you went a little bit below here though. All right, there's a tail there. You touch it there. That's all. I'm not saying that if you are buying here, definitely it will work, but it will reduce the mistakes that people tend to make when they are buying, when the price is still in that channel. That's what I'm saying. So instead of forcing it through the channel, one can be very patient and try to buy above. Trader who understand different time frame trading method will use a different time frame trading method to time it nicely, and they will let it go. So if you have done your fundamental analysis, Google Assist test, all right, you do your due diligence, everything, say, all right, I like it, and what we have discussed at George your channel, all right, buy and hold strategy. We have there is a video at George Trio YouTube channel, all right. Uh, it's a good time to buy and hold. Talking about the Federal Reserve, the referee, central bank is the referee of financial market. Their policy is aligning for a bullish trend, and the market S&P 500 is about to start a new trend, and everything aligned for you. This is 2009. This is what has happened exactly here. 2009, Federal Reserve was blowing the whistle. Say we're going to stop the quantitative easing. Blah 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 blah. The 2008 financial crisis is coming to the end. Federal Reserve start blowing a whistle. The price came to the sweet spot zone here, and now this is your entry here. So after you have checked this financial instrument, say, all right, yeah, all right, this blah 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 blah. It's looking good, looking good. I want to be part of it. All right, want to use portfolio, want to use okay, call option. But there's always a risk, though. I'm not saying because you buy and hold, you cannot lose. Sometime, all right, I can do the opposite. You may say, Joe, I thought I will never lose when I'm using portfolio. One must always control the risk. That's what I'm saying. So buy above the channel. Is that something you can do when you are buying near the 50% Fibonacci retracement level? That will help you to improve your trade. We will do similar thing also when the price goes down, okay, and then rally up to the 50% Fibonacci sweet spot zone. In that case, we would like the price to come below because we want to sell, isn't it? The prior trend was bearish, the dominant from bearish, come to the sweet spot zone. And I will be recording a video at the George Trio YouTube channel when I will be talking about how to sell and hold because it's not easy to sell and hold. Again, you will never sell and hold if you don't do a fundamental analysis. Never do that. All right, so here it is. Again, you want a price to what I'm saying here is that similarly, you would like the best place to sell or to improve that sweet spot Fibonacci trading zone is to buy to sell it below that channel. Here we are buying a ball. So when we are selling below that channel. When the price reaches the sweet spot Fibonacci zone, that's all. That will help you to improve. So you are more composed, more patient, and you are looking for a clean cut entry. Don't forget the horizontal key level, and so on and so on. That's all. Let me know in the comment section whether this is useful to you or not. Have you made those type of mistake in the past? Okay. Will this video be useful to you? Okay. Will you promise me? You do not have to promise me anything, but will you promise me? Okay. That you will never repeat the same mistake again? Okay. Will you do something to improve your sweet spot trading? All right. Use a demo account, practice. You can practice, all right. You can have a notebook and then look for financial instruments that are in that situation right now, and then see what will happen and keep it somewhere, and then see it after 3 months, after 6 months, after 1 year. You can uh, you can hold a stock for 3 years, all right. Okay, and then you want to play safely by paying attention to the market. It's very important. This one thing traders sometimes they forget. So somebody, the mistake that they will make is to watch this video, understand everything that I said, and then that person start buying all over the place. And because of this strategy, one of the mistakes will be not checking the fundamental, the economy new, or the sector, or not paying attention to the S&P 500. Right now, this strategy is not the best time for it. Why? Okay, did you ask that question? It's not the best time now because of okay. The Federal Reserve has started putting up interest rate in the United States. The market has been going up for some time, so this is not a beginning. So if you want to catch a bullish trend, You don't want to catch it in the fifth idiot wave. A lot of traders are doing that. This is the fifth idiot wave. If you want to buy a hold, it's for day trading and swing trading, in fact, and defensive position trading, in fact. All right. So if you look at the S&P 500, all right, you see that what I'm talking about now, if somebody is applying that strategy now, they may get away with it if it's a defensive stock, or I mean, but personally, I won't play that now. Okay, this is the S&P 500. You see, and waiting for the fifth. It has been going up since 2009. Okay, the best time is when it starts here. It went down. Okay, and it start going up. Those are the times. So even here, people can play a bit. The market start going up, supported by the Federal Reserve. So I'm talking about how to buy a whole strategy, a video that I have already posted at a George Trio channel. So this is it. If this video has been truly useful to you, please let me know how. Give us the thumbs up, please. You need to log into your YouTube account. If you have forgotten, you come back another time. Just remember, stick a thumbs up for us. If you say, George, are you kidding me? This is a useless tutorial. I haven't logged in yet. And when I log in next time, I'll mark it down. That's exactly what I want you to do. If you think this is not a good tutorial, log in and mark it down. But do not mark it down just because of the topic, or you want me to talk about something else, or because the video is too long, you're expecting it to be short. Just put below and say, George, we will prefer a short form tutorial in the comment section. And I'll quickly write into my comment area and say, there will be a short form tutorial and there will be also long form tutorial. My apologies. That will be my my response to that comment. But it's something you can put there, but don't mark the video down just because of the length or the topic. Mark it down because of the content. You can mark it down if the acts uh, all right, the sound is too bad. That's what I'm saying. You can't hear anything at all. And I said, did you set your? And then I put in the comment section. Don't you know that there is a volume thing on your computer, and that if you forget to put it like this 100, all right, sometimes it can affect your sound. All right. Have you forgotten to turn on to raise up the volume of your speaker? Something like that. No, I'm not doing that. Okay. All right. All right. If it's truly my mistake, all right, you can mark it down. It happens sometimes when the sound is bad, and I apologize to traders sincerely. All right. Mark it down for good reason. That's what I'm saying. All right. But if you think that this video is an essential tutorial, a little bit longer than you expected, all right, please share it on the social website. The reason why I always encourage traders to share it, or I value those traders that are sharing our video, is because they are helping the trading community. All right, more traders know about it. This mistake they are not doing anymore. So when you are buying a hold, no one is trying to mess you up. You belong to a forum, you talk about it, you hear somebody talking about a strategy that is in fact useless. Don't say in the comment that that's a useless strategy. Just say, I would rather, this is a communication skill. I would rather check the fundamental and then I'll buy above the channel and then you post your chart there. Because if you start criticizing them, they won't be very happy about it, isn't it? All right, something like that. So this is it. The financial instrument that we are analyzing today is not um, S&P 500. It's a WSO Class B, a very long name, Watsco Incorporation Class B share on the monthly chart as always. The topic is about how to improve Fibonacci sweet spot trading fast. So by buying above the channel or selling below the channel, you improve your sweet spot Fibonacci trading very fast instead of playing it up and down here. All right. Thank you for watching, and I will speak to you soon. Happy trading to you all.